Hello guys, welcome to a new video, and today we are gonna discuss a topic that one of my subscriber requested, and that's why I thought let's make that on how exactly I do it. So this is about how do you select a strike price, right? Because sometimes you will have difficulty on choosing the strike price for any option trade, right? Whether it's a put, credit spread, covered call, or any kind of spreads, right? It's very important that you select the right strike price, because otherwise if you will be scrambling, kind of adjusting your options too much, right, if you don't get it right. So it's important that you get that strike price right, because that's gonna help your option position in the whatever expiry you select, right? You don't have to touch your option at all if your strike price is selected correctly. So that's a very crucial step, guys. So that's what we're gonna discuss in this video. If you wanna know how I do it, then do stick around, and with that, let's start. Okay guys, so I'm in my computer screen and I'm gonna take an example of SPY, but again the same strategy or the steps applies to any other stock that you wanna do, or any other ETF that you wanna do on. So this is a universal strategy that applies to any equity that you have in your portfolio, right? So I just wanna explain the steps or the criteria that I do personally, and that's what I'm going to explain. You can apply the same to any equity that you hold in your portfolio. Okay, so the first thing, right, I wanna do three things, right? I wanna tell you three things that I do personally whenever I do select a strike price, right? So the very first thing, right, the first thing is having the right level of support and resistance, and you can have multiple level of support and resistance, right? So in case of a bullish trend, right, let's say you wanna play a bullish strategy, let's say you wanna do a put credit spread or you can do cash secured put on SPY, right? In that case, you wanna make sure that the whatever option strike price that you select, right, SPY doesn't go below that. So you need to have multiple levels of support, right? So you can draw, I already was doing some research for this video, so let's say I already drawn two support line here, right? Because support line, how to do that support line, I don't want to go in too detail, but visually, right, you can clearly see that it the previous resistance, right, that becomes the future support. That's the guideline that you can follow. So if you look at here, right, and this is a 1 year kind of a time frame. So if you look at here closely, around March, SPY was struggling to cross this 520.25, right, 525 kind of boundary, and it kind of fell down, right? So that, and it slightly it came back up, it tried that again, touch here 525, and it didn't go below that, right? So basically this resistance that it had, that became the support here, right? So this 2 point kind of tells you that whatever the resistance it had, that became the future support line. So this is one line, and that kind of it touched again. So the more number of touches that you see, the stronger the support you have, right? So this is one level of support. Even for a short term, if you see, right, there is a support line here, so you can actually draw that as well. So let's say you can actually, let's draw that here, right? So you can quickly see here, right, that's also a line that you can see. So this is like a 3-level support, right? So if you wanna play, depends on your risk tolerance, right, you can select the appropriate support here. So there's one support here, and here. This is the very long-term support that you can see here, right? So that's the first thing, right? You can have multiple level of supports, and depending on your risk appetite, you select your strike price, right? That's the first thing. So that's what I do. I kind of draw multiple level of support, and then I select my strike price on how bullish or bearish the market feels, right? So that's how you can do. That's the first thing, but you have to always combine with multiple things. This is one of the things. The second thing, right, now let's discuss what I do second to make sure that what I am selecting here is actually matching with that other couple of things that I do too, right? Okay, so the second, right, and this is very good technical indicator that you can use for, especially for options trading, right, and that is called Ballinger band, right? That's invented by a guy named John Ballinger, and he introduced this indicator. So let me add that indicator, right? And you can use any platform, either TradingView or any other, or if you are into the Charles Schwab, you can use their platform as well. Yahoo Finance is free for some indicators. If you want to add more indicator, they kind of charge that, but it doesn't matter. I'm just explaining you the indicator itself, so you can use any platform. Okay, so this is a Ballinger band, and it will ask you this period. That default is 20. I'll explain you in a bit what this 20 is, right? And then standard deviation 2, right? So this is the standard that John Ballinger had given, the default, but you can always increase or decrease this thing, right? So the 20 is kind of the daily average of the simple moving average that you see, right? So that 20 indicates that 20-day simple moving average, right? And the 2 standard deviation is basically this 20. Let's go to the line here, right? So the line, that middle line that you see here, that's your simple moving average of the 20 days, and then this, the upper and the lower band, there are 2 standard deviation up, and this is 2 standard deviation down. Standard deviation is kind of a volatility, so how volatile that stock was, depending on that the standard deviation varies, right? So that's an indicator of the volatility. So the 2 is something that John Ballinger would have thought that 2 standard deviation is kind of would be kind of an average, and so that's why he added like 2 up and 2 down, right? So with that, if you look at this, right, it kind of plotted a graph. Okay, and whenever, if you look at the prices, right, let's this area, right? So whenever you see that the price of the stock, the SPY in this case, let's say it's dropping here, right? It dropped below the Bollinger Band and it came back up, right here. So as soon as it kind of went down and then it came back up, right? So this was like a buy signal. You can think of this as a buy signal, right? Similar as this one, right? Okay, so this one, it came back up here but it came down. Okay, so this could be your resistance level or it could be a sell signal here. So this is, and this, if you see a large gap, right, with the standard deviation, that means you can kind of ignore this period, because that means the standard deviation was so high that the range was really high, right? Especially this happens if the stock is very volatile. Let's say for example Nvidia, right? It's kind of volatile right now, so you will see that if you plot the Bollinger Band in that, you will see a very large deviation here, right? So SPY market is right now volatile, that's why you see very large gap here. So this thing that you see, right, very consistent pattern, this is a good range to trade on. This is if you see like this is a difficult market, guys, to trade on. You can clearly see by looking at this graph. Now coming to the strike price, right? So let's say I want to select some strike price. So for the support level, I would definitely make sure that I am kind of I'm not going too above the lower side of the Bollinger Band, right? So if the lower side is around 530, 34, if I am bullish also, I will not go too above that. I will try to keep myself around this range. So for any stock, if you are doing a bullish strategy, try to stick around this range, or if you are bearish, then try to be stick around this range. So that's one more indicator that you can use to select your strike price. If you have any question guys around this, then definitely ask. I do use in a lot of my trades, not just the bullish and bearish. If you have like a mix of that, like a iron condor, to do the iron condor, the Ballinger band really helps in that to give me the upper band and the lower band, right? So this is very useful there. Now the final one, right, which I'm gonna show you in my Robinhood portfolio, because that's kind of related to, it will be easy for me to explain there. Okay guys, so the final one, right, and that is I'm in my Robinhood account, and the final one is delta, right? You guys cannot leave the delta out if you are doing options trading. Okay, so for delta, right, how do I use it? So let's say I do wanna sell a cash secured put on SPY, and I do go like around 30 days, is like September 30, right, at the end of the month. So what I do is I try to keep myself around like 30 delta, because 30 is kind of not too aggressive. So you should stick yourself to like a 30 delta. So let's say in this case 525 is 27, right? So this is pretty okay. This is a good chance that this option will expire worthless. So that is a good safe delta that you can go below that. If you are doing a covered call, the same thing applies, only thing the value would be negative. So in this case, if you see this, right, the negative values, right, so you see minus, right, so on the upper side. So yeah, like I said, right, the market is little volatile, that's why you see this huge upper and lower bound range, right? So on the upper side also same thing, your delta has to be like close to 30 is good, and the value you will see negative, but you can infer that the same thing, it's the same thing. So those are the three things guys. I just want to quickly recap. The first one that we discussed was about how you can draw the support and resistance line, and draw as many as you can, and then use that as your basis for a strike price. The second one is the Bollinger Band. That's a very good to identify the upper and lower band, because it's just a simple moving average with the 2 standard deviation up and down. One thing that I think I forgot to cover is the standard deviation, right? If you want to play more safe, instead of 2 you can do 3 standard deviation up and 3 down, right? That will give you more wider range, and it will give you a more lower bound range, right? So if you select that as a strike price, that's a good one that more buyers will come in if it touches that line, and then it will go back up, right? So that was the second. The third one is the delta. So delta is again keep yourself to 30 delta, you would be good. And again, if market really doesn't turn in your way, you can always roll out the option guys. I have a lot of videos on how you can roll out, roll up, roll down. You can do all the things in options. That's the flexibility option trading provides you, so do use those tools. So that was the topic for this video guys. Again, if you have any questions related to options, do put all your questions down in the comment and I will reply back. I will talk to you in my next video guys. Till then, happy investing. Bye bye.